Not everybody just says, by the way, I think I'll try and buy the business that I work for.
When I left FinnCap, I was one of 80 women ever in the UK to build a business over 50 million revenue. I was 33. I didn't know what I was doing. I'd never been a CEO before. There is no playbook to be a CEO. I just was utterly convinced that we were there to help ambitious companies grow.
How did you feel emotionally when you did your first redundancies?
I took no pay for probably 4 months. Our utter secret sauce about everything we did, it was about how we treated people. Culture was our key differentiator. I'm very keen to work with all underrepresented founders who basically the system wasn't built for. I have the same passion to change the ecosystem for underrepresented founders as I did right back in the beginning for changing culture in financial services. I pick the thing that I'm most scared of and I work on that.
Welcome to Billionaire Business. My name's Ian Fishwick. I was a serial entrepreneur in the UK IT and telecoms industry, but at one point in my life, I ran a public company on the London Stock Exchange for 17 years.
And I'm Chris Godsmark, and I've been advising on M&A deals, flotations, fundraisings. I've probably done 200 deals in my career over about 20 years.
I floated my business on the London Stock Exchange in 2006. That was Adept Telecom that was later renamed Adept Technology Group. When I first started to do meetings in the city, it was actually quite rare to ever find a woman in the room. And then in 2007, it started to change when suddenly this lady decided to buy a stockbrokers and became the first ever chief exec of a stockbrokers in the City of London. This is one of the city's great trailblazers. A huge warm welcome to Sam Smith.
Thank you very much. Lovely introduction too.
Sam, great to see you. How did you get into it? Are you from a sort of family of Surrey stockbrokers type of thing, or was it a bit different?
quite the opposite. I went to state school. I was the first in my family to go to university. And I decided, I was weighing up between a primary school teacher and an accountant. And I decided to go and be an accountant. And I did love numbers and I did love economics and studying people. And I did 3 years there. And when I left there, everyone else was going to investment banks, doing their thing. It was the normal route. And I just thought, for various reasons, I don't want to do that. I don't want to do something big company. And turned down all the other offers and just went, I'm going to do something else. And right at the same time, a stockbroker called JM Finn said, we'd love to hire someone to set up this corporate finance division. And that's how I got into it. Totally accidental, really liked the guy who was setting up the team. I was 24, had absolutely no idea what I was doing. I just thought, this sounds great. Everyone else thought I was nuts, but not me.
Obviously, it turned out well. I was saying to Ian before this, I had a mentor when I moved into the city, who I think sadly had passed away recently. And he said to me, his one word of advice on the first day was, never go into management. Because a lot of people like me who are deal doers are useless at managing stuff. Well, I've never tried it really, so I wouldn't know. But you've sort of done both, haven't you? I mean, you went from building something, doing deals, and then obviously ran this hugely successful stockbroking and corporate finance business, which really has become the leading dominant player in the small cap market.
Yes. I mean, I think for 10 years, I was doing all the transactions like you, hundreds of different businesses, raising money, floating them. I was in the detail. It took me many years to get out of the day-to-day running it. But I think if you said to me at the beginning, you were going to set up something, you're the leader, I would have panicked. I still didn't realize until 10 years later I was an entrepreneur even. But the fact I was the deal doer for 10 years while growing the division was really fun. I was just head down going, I love this job. I'm learning so much more than my contemporaries because I'm doing everything. Doing a bit of fundraising, doing a bit of documentation. I'm getting high-level access to these amazing businesses. I'm watching companies grow. It was only really after 10 years where our division had built pretty meaningful turnover within the group that we wanted to grow further and we wanted to do our buyout. And at that point, I went from running a division, which was fairly sizable within the group, to running FinnCap, the separate entity. And I stupidly thought, this is the same job. I'll just be doing the same thing. I'll be advising clients day to day, and that will be my life. And within about 2 weeks, it was very obvious. The CEO job is not like running a division. buck stops with you. And that moment, I think I realised, age 33, I'm probably an entrepreneur, and this is about leading, and that's what I love.
But let's go back to that. Not everybody just says, by the way, I think I'll try and buy the business that I work for. Right. So what made you decide that? And where did you get your money from?
So I think, now I look back because I'm trying to help other women to grow big businesses. And I think, what was it about me and what was it about the process? And I think there was something in me that I always was very driven, but always wanted to grow. And in the early stages, and this is why I think businesses take a long time between that 0 to 3 million revenue, particularly female founders, is you're just iterating, you're just doing your thing, you're doing something you're passionate about, you love it, you're head down, and you're just building this business almost without thinking. There's no structure, you're just doing something you love. I think there comes a point where you say, right, this is getting serious. And the point for me was at 3 million turnover. The business took us 8 years to get to 3 million turnover. It's a long time. But we said, okay, if we need to continue to grow, we now need to do something which involves investment. And for us, we couldn't really just carry on that growth trajectory without having a decent chunk of money, because that next stage involved us becoming a stock market advisor, which meant recruiting 4 expensive people, going to the London Stock Exchange, applying for your license, takes 18 months to get it. So you're wearing all that cost for that period of time. So it's quite a big risk. And we just wanted to do it. That was just the automatic next stage. It just happened that we wanted to grow. That was the next stage. It involved probably £500,000. And we couldn't really take that out of our own P&L anymore, because that would have meant us, all our team, earning nothing for a couple of years to invest. And we said, look, we want to do it, but we need something. We need some help. We need some money, or give us equity in your business and we'll take some risk. The private client stockbroker, J.M. Finn, said, no, you can't have any equity. So 3 years was spent knocking on the door saying, well, actually, I really want to do something. I want to do this growth. We're not going to use all our own money.
So it took you 3 years to persuade them to let you buy it?
Yes. So their first answer was, I think after a year of nagging, which I'm very good at, is resilience, keep going. It was, you can have 10%. So yes, you can do the buyout, you can have 10% and everyone will have 90. I was thinking, well, that is not going to work. That doesn't even incentivize me, let alone an entire team. Another 2 years later of constantly saying, right, we need to do this, we finally got to 50-50. So it was a mindset of just wanting to keep going, just that passion to do what we wanted to do, passion to do more, really wanting to service SMEs really well.
When you said there was a team, how many of you were there, and how many of them were women?
So interestingly, when we started the MBO discussion, there were probably less than 10. So 10 of us doing £3 million, and all earning quite decent money individually. So it would have been a big ask for everyone to invest at that point. When we got agreement to say, right, it's going to be a 50-50 split, I then had to start recruiting people. So most of the people I then recruited was on the promise that we are going to do this buyout. Mm-hmm. It's going to be called FinnCap. You're going to get some equity in something that's basically worthless because we're starting from scratch. And you can come in at the bottom and isn't going to be exciting. We're going to build this great brokerage for SMEs and it's going to be exciting. And what was amazing, which was not a planned thing, which is why entrepreneurship is so great, it's just sort of flying by the seat of your pants, isn't it? Just saying what we did there was find people that were entrepreneurial, because no one would have left their job to take equity in a startup. But I didn't realise that. I didn't have a strategy of saying, right, I'm going to find really entrepreneurial people by doing this. All I did was say, we've got 50% equity. I'm going to go out and find the people. I'm going to sell them this vision. They were excited by it. They sort of self-selected themselves. They were entrepreneurial. They wanted to build something. So by the time we did the buyout, 3 years later, I had a team of 28 people.
And it comes down to a absolutely key point, doesn't it? These businesses are people businesses, aren't they?
Yes.
Essentially. So an awful lot of what you were doing was sort of hiring and managing people to try and get the best out of them. And that's a really difficult thing to do.
But that's what I loved, and that's what became our USP. We didn't realise it, but a further 5-10 years later, what we realised when we were number one in the space, starting out as an outsider, was our USP isn't just the way we care about our clients, the way we're dealing with clients, the way we're raising money, looking after them, really focused on the SME space. It was our culture is amazing, and it's different, and it's inclusive, and it's very open, and we're including people in the equity. And we're finding these mini entrepreneurs all over the place who are buying into not just us, but themselves. They don't need a big Goldman's, Rothschild's name behind them. They can actually go out and win work because they're great people. And so this culture thing became my passion, still is, and that became really our only differentiator in a space that led us to become the market leader.
And this was a time, I was just thinking, this was a time, also having worked in a broker in the past, there are some brokers, and at that period in the city, there were elements of culture that were pretty toxic, very male. The fact that you were the only female CEO of a business like that, did that make the culture different? was it because you were looking at it from maybe a different perspective, or was that just sort of incidental, if you like?
So it's a big question because there's lots of things in it. But if I go back to the start, if I think 20 years ago when, we were looking at the buyout, we were thinking about what's our real differentiator. We're going to have to raise some money here from ourselves. We're going to have to get people to back us. We're going to have to get our parent company to back us. What's our vision? And it was really to say, what is special about us? We're going to care about SMEs more than anybody else. But culture was not a word that was ever used. 20 years ago, culture wasn't in the dictionary. There were no culture consultancies. It wasn't a thing. So this is why I like to say I like warrior mode. That's what I do. It's like I find things that I believe in, and then I just champion them. So for me, culture was, and we never said culture, it was how do we treat people better? How do we value people? How do we make them want to love coming to work and love this job? How do we get the best out of them?
I don't think that I ever talked about culture until after I'd finished.
Well, no one did.
I used to talk about what I was trying to do and why it was exciting.
Yeah. So I treat it as what's doing the right thing? What should a business be about? Should you care about your team? Of course you could. So fundamentally for me, so no one talked about it. So it was a case of, and everyone would say, why are you doing this? Why are you looking after people? Most people just get rid of the bottom 10% in investment banking. Why are you not doing that? Was I would see it completely from the other side, which is partly why I think I took the decision to start this thing in the first place when everyone said don't do it. And I was like, I don't get it. I see things quite differently. So all I could see was, I don't understand why you don't recognise, if you look after your team, if you really get them involved in the why, involved in the passion, get them involved in building.
And did they stay with you a long time? Was it the same people?
Yes, some of them almost too long.
Yeah, but that's huge, isn't it?
We just had an unbelievable culture, and it was fun. And that was the other thing. It was like, let's look after our people, but let's have a load of fun, because we're raising money from super exciting companies that are changing the way sectors are working. We're seeing disruption right in front of our eyes. We're seeing these great businesses build really big. And we're at the forefront of this. And that is exciting. So we never recruited a person who was I'm all about the bonus person. We recruited people who cared about helping those companies grow. And as a result of helping them grow, they would make good money. Very, very different way of looking at it.
So you build the business up and it becomes the market leader. Without a shadow of a doubt, for those smaller companies looking to raise money on the stock market, was it just the culture that got you there? What was the strategy that you sort of employed? Because you were looking at competitors who at that stage were sort of starting to fall by the wayside a little bit.
So, when we started, we had 80 competitors right at the start. 80 other brokers, hard to believe now. And then they just reduced and reduced. But
how many other now?
Oh, gosh, I'd say less than 10 serious ones.
In that small company space?
In the small mid-cap space.
Yeah.
Yeah. And every year I present the strategy of, this is who we're going after, this is who we're going to take the clients off. And every year via, we think they're going to go, they're still here, they're competitors. Anyway, that just happened every year. But the short answer is, I would say culture was our key differentiator. If I'm looking back at what was the one thing that was our utter secret sauce about everything we did, it was about how we treated people. But when we set out to do the buyout, and we were outside the top 20 in terms of number of clients we advised at the start of the MBO, 5 years later we were number one. So we were going at some pace. The reason for that, I think, was when we set out our stall at the MBO saying, right, what we're going to do now, we're seriously on our own, we need a core differentiator. We said, everyone else advising SMEs basically treats them like the lowest class of company.
They get a B.
They get the B
service,
team or the C team. They get the junior team. They, it's almost like, just look after them. They might be great one day. And we'll also raise money for them and we'll just move on. I think we called it float and forget. So that was sort of, you'd raise money for the small ones, get a fee, leave them. And that was it. My view, having spent 8 years of seeing, this is entrepreneurship, like in the making. This is why I love it so much. You're seeing companies start with nothing, create value from thin air and turn them into potential £1 billion businesses and beyond. So I just thought, okay, so if these are the companies of the future, bearing in mind everyone forgets every FTSE 100 started as a startup, none of them just suddenly appear overnight. If we are dealing with the FTSE 100s of the future, shouldn't they get the best service? Shouldn't they get the best people? Shouldn't they get the most love and the most respect? So I think that sort of turned it on its head. Our attitude was, and our strapline was, helping ambitious companies grow. We just wanted to help them grow, give them 24/7 service, make them feel amazing, make them feel important, champion entrepreneurship.
To me, there's two big lessons there straight away. One is you managed to explain what you're trying to do in a single sentence, not a book or 5 pages. You boiled it down to one sentence. But the other bit is anybody who tries to address all parts of the market, small businesses, medium-sized, big ones, you're going to be no good at everything. It doesn't matter which part of the market you pick. Just be very clear which one you're going for and focus on it. And you spotted that small businesses were not getting the proper attention.
Yeah, and that really came into its own in 2007 in the financial crash, because we did the buyout 2 weeks before Northern Rock collapsed and the general financial crisis started. So I've just asked my team to put in £500,000, my parent company to put in £500,000. So that's how we funded ourselves, with £1 million back in 2007. 2 weeks later, we actually had a Northern Rock opposite our office with the queues of people trying to get their money out of the bank. It's like, oh my God, what have I done? One, I don't know how to be a CEO. I don't really know what I'm doing. It's like carry on corporate finance, I used to call it. And also, we're entering a very bad market, and I've just asked all these people for money. But what that did was make us go absolutely head down on SMEs, because everybody else gets quite flaky. When the market gets tough, you can see people's true colours, I think, when the market gets tough. And we love SMEs. We're utterly convinced that this is where the future is. They're going to be having some problems. What we're going to do is double down on SMEs.
That was brave, wasn't it? Because obviously I ran one of those SMEs, right? And when there's a crash, people say, BP and Shell are not going to collapse, but I'm not sure about these small ones. And there's a flight of money, isn't there,
yes,
to the top. So to double down and say, no, these are the future. It might be a bit rocky, but we're going to live with it. That was a big call.
It was, but you have to remember, I was 33. I didn't know what I was doing. I'd never been a CEO before. There is no playbook to be a CEO. It is a making it up as you go along job. And I was probably quite naive, but I just was utterly convinced that we were there to help ambitious companies grow. That was what we were about. This is what we're doing with SMEs. Everyone's out exiting. So this is my moment. I can recruit some amazing people because they're all getting fired. We stick to our knitting. This is where people need the love, even though they're going to do no transactions. So
was it a close call?
Not even.
No. I mean, in terms of
whether we got through it.
Yeah.
Yes.
Because it must have been tough.
Yeah, we took no pay. I took no pay for probably 4 months when it got very hairy. We always had a BC plan. Our next team down would take a proportion of no pay for a matter of months. We then had a next plan of everyone's going to have to take a 10% pay cut. So when the market really got very bad for SMEs in 2009, had to make the first redundancies, which was awful. But we also were taking no pay, and we traded we were probably 6 months away from having no capital.
That's a really interesting story. I mean, there are very few people who say, I want to do redundancies until I've actually stopped paying myself first. So the fact that you'd led from the top, that's pretty
culture,
unusual.
Isn't it?
That is very unusual,
doing the right thing. To me, that was, hang on a sec, if we believe in this vision and we're in it together.
And how did you feel emotionally when you did your first redundancies? Because first time I did it, it was a real knockback.
It was horrendous. And I talk about it a lot when I'm sort of advising other female founders, because that was the one moment where, yes, I didn't know what I was doing. Yes, I was doing it anyway. Yes, I absolutely believed in the vision. But that was my first big decision, because we were very family feel. Culture was our thing. To sit opposite people knowing that you're going to have to make them redundant.
And you know about
horrendous.
Their families, and
my God.
I've been there in the post boom period, so the early 2000s rather than the crash, but very difficult.
It's a big deal, and I knew it was probably coming. I knew as I kept hiring very good people, I was probably going to have to cut people, and they probably were going to be some of the original ones who might not make the growth journey. So I didn't not know what might happen.
It's a horrible situation that most chief execs face at some point. How do you get through that and still have the respect of all the people that's working with you? Because some people get it wrong.
Yeah, and it's hard. I think exiting people well is a skill. But so the first thing I did was get a coach. So that was the first time I got a coach, and I've had a coach ever since, specifically about how do I deal with this, because I'm really struggling. And and he coached me through it. How do you get your head set right? How are you going to have these conversations? How are you going to go through with it? And one of the big things he said, framing it, was, you're not there to think about the people who are going, because that becomes very difficult. You're there to protect the people who are staying. That is your job. So you have to try and take the emotion. You're there to protect the people who are staying in the business. And then on the day it was happening, I remember I'd be in and out of the ladies' loo, like overworked, crying, calling my coach, just saying, I don't know how I'm going to do this. I know their family. I know. But I did. You just do it, and you do it as nicely as you can, and you're authentic, and you try and help them find another job.
I've been through that several times, right? And I used to stand up and say to people, I've personally been made redundant twice in my life, and the way I was treated was shocking. So I promised myself that I would never, ever treat people the way that I was treated, right? And therefore, you're never going to make it nice, but at least treat people the way you'd like to be treated yourself.
And it impacts people for years. I've hired people that had been made redundant very suddenly, very badly, and it affected them for 10 plus years in terms of their confidence, that what they thought, how they impacted in certain scenarios. It's very life-changing doing it wrong. But back to we're a people business, and my thing was, I want to look after people, and I care about people. And yes, I have to make difficult decisions. All businesses do. Good CEOs have to be firm and tough and do the right thing for their business. But there's no excuse for not treating people, in my opinion, well, and how you would want to be treated.
Which is great advice. And Sam, so one last point about FinnCap, because you mentioned that you started in the post-crash period, and we actually set our business up at exactly the same time. Northern Rock had just gone down. And of course, what happened with the crash was interest rates come down from maybe 6% to 0. And so all of this money globally moves into private equity, who can put lots more debt into businesses than the stock market would accept. So you've had, since then, obviously, this incredible growth globally and in the UK market in private equity. So you're building this business, which is focused on the stock market, at a time when all of the headwinds are sort of almost going in the opposite direction. That's a pretty tough thing to do because people are bailing out of the stock market while you're building this business. How did you manage to sort of navigate your way through these really choppy waters?
Yeah, I think people forget over the time we grew it, for 24 years that I grew that business, the market was shrinking. So to grow a business to be not just the leading advisor, but to continue to grow turnover to over 50 million, to IPO that business in a shrinking market, you've got to be doing something well. And that was where it was our culture that was continuing to drive clients to us to take market share. But it was also being utterly focused on our purpose and what we were doing, which was we are going to dominate SMEs. We believe in this space. We know the sort of service they need. And if that's our utter purpose, whether IPO markets are going well or not, we can add other services. So that's how we sort of super scaled it. We said, okay, capital markets isn't so great at the moment. We will add private markets.
But you've got to be tough, right? To be really clear, you were building this business in a terrible time for the stock market. I mean, let's not mince words, right? And you need to be pretty resilient to come into work every day when floats are being pulled, people are selling shares, share prices are going down. That's quite a remarkable thing to do, is what I would say.
Yeah, and I would say resilience is something that I have always had. But that resilience comes from utterly being passionate about what you're doing. So it wasn't just building the investment bank. That wasn't necessarily the passion. The passion came from, I am going to show you can build an investment bank that is making as much money as everybody else, but is doing it differently. And I believe there's a different culture and a different way of treating people, a different way of working that should be in this sector and isn't. And that was my get up every morning going,
but you then went on to do an acquisition when you bought Cavendish,
yes.
Which is, one, why did you do it? And how did you get them to have the same culture as you?
Well, they didn't have the same culture as us at the beginning, which I found out very quickly. But that was part of we were at about 17 million turnover. We were a bit stuck. We have 5% market share. We said we can probably double our market share in capital markets, but this is a hard market. And if we want to continue growing, which is the theme here, we just always want to continue growing, what are we going to do? So we said, we're going to have to acquire something. If our basis is we're helping SMEs, what else can we offer that they will really want that's different? So everyone else was looking at other brokers to consolidate. We were saying, we don't want to do that.
Just explain what Cavendish do.
So Cavendish are an M&A specialist boutique. They were one of the largest in the growth company space in the UK.
Selling businesses,
They sold
basically.
many businesses, mainly founder-led businesses, to private equity, to overseas buyers, and they were brilliant at it. And that's all they did was sell businesses. So we wanted to add that service. We met them. I'd always respected their business. I just thought they were an unbelievable brand. They got amazing prices for people. They really went above and beyond for their clients. So we knew we wanted to add another service. We met them. I knew 100% that's the thing I wanted to buy. Took us about a year and a bit to come to a deal because they wanted money, then they wanted outright cash. I was like, no, we're not going to do that. Then we had shares. And then we realised, okay, if we're going to buy this, we're going to have to IPO the business combined. So a year and a half later, we did the deal. It was utterly culturally aligned on a service level. So are they utterly giving their clients an amazing service? Are they delivering the best prices? Are they the best in the market? The difference came under the bonnet, which is where we realised why we were so different, is yes, you can culturally be great with clients, but what about your people internally? And their culture internally was almost opposite to ours. It wasn't team. It wasn't about the team. It was about the individual. It wasn't incentivized based on the team.
I find that fascinating because a lot of people say, put your customer first. And I've always said, put your employees first, because I've never seen an unhappy employee give good customer service.
No, and I think that's absolutely right. People go at it from the wrong way, which is why at the beginning when we said our differentiator is caring about SMEs more than anybody else. Very quickly we realised our differentiator is caring about our team more than anybody else, and therefore they will care about their clients. So it was all part of the same thing. But with Cavendish, when we bought it, oh my God, it was a 3-year turn. It was the hardest thing I've ever done. Out of all the hard things that we did, that was the hardest because the culture wasn't aligned. They were a 35-person team, and I had to go in personally and change it. And that involved hours and hours of conversations, convincing, building trust, getting them involved in why the team's the vision, realising people will help you, not stab you in the back.
You stood down. I'm not quite sure how many years you've been doing
it. Yes, after that almost killed me, I think, that process.
So how many years
24.
24. So what's Sam Smith doing now?
So Sam Smith, after 24 years, decided that was my CEO life over. And
you wouldn't do it again?
No. Although never say never, because people do say you might. But I don't think so. I think I knew when I was leaving that was probably my exec career done. I was so tired and so burnt out, had no energy left for it. And very quickly, because my focus was on culture, I wanted to champion entrepreneurship in the UK, focus on good culture, focus on what I think business should be, which is a force for good, and really be involved in helping businesses superscale. So that's what I started to do. I started to get a portfolio of non-execs, really interesting businesses from all different sectors. I advised companies. And then along the way, as well as those, I advised 6 boards and on 6 boards. And I started a business last year called the Superscalers. And that has become almost my new FinnCap. I have the same passion to change the ecosystem for underrepresented founders as I did right back in the beginning for changing culture in financial services.
And these are all female founders, is that right? Or?
So it's a community for underrepresented founders. That's how we started. I went to a state school, and to be honest, in my whole journey, people talk about a lot. I was the only woman, but my state school background was my biggest worry. It was the biggest blocker. It was my biggest issue, way more than being a female. So I'm very keen to work with all underrepresented founders who basically the system wasn't built for. Our community has started with a female founder community. We're now up to 180 women in the UK. We're just going into the US and Australia. And our vision with it is to be the largest community in the world for female founders, underrepresented founders who've got to 1 million turnover. The problem we're trying to solve is we don't have enough underrepresented founders building businesses of scale. So when I left FinnCap, I was one of 80 women ever in the UK to build a business over 50 million revenue, ever. And it took me 2 years to find that data. 2 years. So none of us knew each other. Everyone like me of these 80 was disrupting their own sector, started 20 years before, just making it up as they went along, being really tough and resilient. So we found the 80, said why they're not more than 80, and the Superscalers came about to say we're going to double this number. Last year we ran the stats again, it was 144. So
what's the threshold for the 144? Sam?
50 million. So a superscaler is someone who's built a business during their tenure to 50 million revenue.
So you've got 144 predominantly women.
All women.
All women with turnover of over 50 million.
So that number's gone from 80 to 144 in the UK. So we are trying to grow that number. My real reason for doing it, and the passion, because you've got to have the passion. What is my why is if we can get women to build businesses of scale, that's when you get a serious voice.
So do you only help them when they get past 50, or do you help them to get to 50?
So the Superscalers is a community of, once you've got to 1 million revenue, up to 50. So we have our aspiring Superscalers community that we are helping to move past 50 million.
So what kind of practical help do you give?
So the main thing we're building, some of it's just a peer-to-peer community that you are able to ask questions. So I think of it as like, what is the community I would have wanted when I was building that would have helped me, say, shorten that time by half? What are the things that you can ask? So one, it's just practical peer-to-peer group learning, being in a community. The second is teaching them about growth. So I've just finished a playbook, which has come out of, we've now got 180 women in the community talking to them, comparing it to all the thousands of mainly men that I've advised over 24 years and how they think about growth, and seeing what are the patterns of the things they don't know. So I believe there is a playbook to superscale. I believe there's a playbook for underrepresented founders that they just don't know these things. They get to 1 million and they stop because it's too hard. How can I help them get above 1 and make it easy for them? So this playbook consists of 12 hacks. I am in the process of putting it together. I've written it all. I've got to film it and get it out to as many people as possible. But that, I think, is part of the unlock to bring them a community, give them the playbook, give them the confidence that they can build. Because my opinion is the 0 to 1 million piece is the hardest part of building a business by miles. The rest of it becomes easier and easier. And what founders who don't have anything to do with the system don't realize is that because you got to 50 million, you always started where they were. It was as difficult.
What's remarkable, though, about it is you've got 144 businesses, 50 million revenue. I would guess an enormous number, a high percentage of these businesses people have never heard of. And the people running them don't seem to be locked into the kind of networks that maybe male entrepreneurs are, in a sense. I would have thought anyone who has a 50 million business will be deluged with advisors trying to sell them private equity or different products, for example. No. It's remarkable.
Particularly if they're in the regions, but it's even harder.
A lot of them are in regions. A lot of them have never been to an event in their life because they don't feel like they should be there. It's unbelievable. And if you look at the sectors they're in, there's no consistent sector. So everyone's been building in their own sector, disrupting in their own way. So it's not traditional tech. It's not the hot spaces that everyone's in. They're just doing real businesses.
So are you introducing them to private equity and advisors and debt people?
No, because this is the other interesting thing about the whole project is I would say over 90% of these female founders who are building have bootstrapped their business. So they have not raised outside funding. And what we see is there's a very, very big gap in when women want to find funding and the money that's available. So VC money...
Last time I looked, it was something like less than 2% went to women founders.
That's the big thing we always hear, is that 2% of VC money goes to female-only founded businesses, which is true. My bigger question is, hang on a sec, are we asking the right question here? The question is, what's the right sort of capital? Because if you just try and throw more VC money at women and they don't want it, you're not actually helping solve the problem. So my view is the funding gap is about sector, it's about type of funding, it's about how patient the capital is and how long-term it is. Because if I think about me as an example, if someone had offered me VC money to go twice as fast at any point in my journey, there's zero chance I would have done it. Zero. So we bootstrapped, raised our £1 million from the team, and then we IPO'd and raised some money on the IPO. Nowhere was VC part of that agenda, and no way would I have been persuaded to take it. So it's not about having availability of that capital. I would say 90% of the women in my community that I work with would not want VC capital for the same reason. They don't want to be pushed to exit in a period of time. They don't want to be pushed for the pace of growth. They don't want all this money where they might think, oh my God, I might have to sack some of my people in 3 years' time. They're building with purpose, building a legacy, building to disrupt. They want to protect their teams. They are thinking about growing a business in a completely different way, as many men that I've seen grow businesses who quite often grow to exit, grow to build a certain scale, grow to exit to a private equity firm. That isn't the motivation of most women building. So the capital doesn't quite fit.
And Sam, you seem to be as passionate as you ever have been. How big can this network get? You're already going international.
So I want to be the biggest global community of female founders over £1 million. I mean, we're going to be in America, we're going to be in Australia. My vision, if we're the biggest, can you imagine the community that can build, the influence? We can start getting those women into positions of power. We can start creating the ecosystem that women need. There's nothing wrong with the one that works at the moment. It works for men, but it doesn't really work for women because it wasn't built for or by women. So with this community comes a system that we can build the right solutions.
One final question from me then. Okay. And I hadn't classed myself as a super skill, but I suppose I am now. But I would have loved to have had your book at the start. But what's the one thing that you wish you'd have known at the start?
So I think the one thing which I still struggle with today, which is ridiculous, is to realise my own value and to realise that anyone at the top of anything is just like you, was just where you were once. It's not because they're extra special. It's not because they did something extra special. It's not because they got some superpower you haven't got. It's just because they've been given opportunity, they've got experience, they've had the time. And if I believed that I was as valuable as that person at the top, I think I would have had a lot more confidence to
I think
go
it's very
faster.
lonely at the top. And I had a
Very.
mentor for a long time. Once you got a coach, did you keep it all the way through?
I've always had a coach, but I've swapped coaches for different things. So the person I got in the redundancies, that poor man who had to deal with me crying a lot, 2 years later, I needed a different coach. But my current coach I've had for 10 years, and that's
Yet again,
that's
I've
been
asked two
good.
final questions. You do the last one.
Sam, it's been an absolute pleasure, but I have to say, I think that it's a great way to end it, because I think that combination of sort of, you've got to be confident, but also lack of confidence. That being it's okay to be nervous. It's okay to fret about whether you have got what it takes to be a leader, to be an entrepreneur. And we were talking about this in our previous podcast. You got to sort of take the ball, you got to run with it. But you can also go home every evening and think, am I good enough to do this? And I think that's great. It's a great way to end
and I think the
it.
way to overcome it, particularly with female founders that I've seen, is you just got to get out of your comfort zone. And that is, I've done that my entire life. I pick the thing that I'm most scared of, that makes me feel the most sick. And it started off with public speaking. And I work on that.
We could probably do an entire podcast on the fear of public speaking. Sam Smith, it's lovely to see you.
Oh, very
Thank
nice
you.
to
It's
see
been
you.
brilliant. It's been brilliant. Thanks, Sam. Ian, what interested me about Sam's interview, she is in many respects an archetypal entrepreneur. She banged away at trying to persuade employer to sell her the business. They eventually did. She builds it up into a big business in a difficult market. And actually, all of the qualities that Sam shows are similar to many of the other entrepreneurs we've talked to in the series and the previous series. But she's in a really specific market. I mean, UK small company stockbroking is not, the same as running, a business in a huge telecoms market or an energy market or whatever. But actually, they're very similar qualities.
Oh, completely. I mean, when we first met, I thought the conversation was going to be about, I was the first woman to ever run a stockbrokers in the City of London. Enormous achievement. It wasn't. It was completely about how do you tackle business problems, right? Her original worry was, I didn't come from private school. I was different to everybody else. It wasn't I was a woman and that they were all men. It wasn't like that at all. And that bit about small companies, there's a lesson there for many sectors, because I think what she'd spotted was the traditional stockbroker did everything from little tiny businesses to giant ones, but the fee you get from, say, BP or Shell or somebody is obviously massively bigger than the small one. So they tended to not treat the small ones very well and use all the junior people. And she just said, you can't be good at everything, let's be good at that. And nobody else had done that before.
Yeah, it sounds so simple, but there were two things really that she did, which are lessons for everyone. One was understand your market and focus. So she decides we can't be all things to all men, we'll focus, right? The second was, you win by having outstanding customer service. Now, customer service for a pension fund who you're giving advice to about investing in a small company listed on the stock market is a quite nebulous thing. But she's really saying, look, treat it in the same way as any form of customer service. You're respectful, you give them, what does it mean? You speak to them frequently, you deliver what they ask for. Yeah, and that's a really interesting lesson.
Yeah, I mean, I'm not sure I've heard culture mentioned so many times in an interview for a long time, but really what she meant was we were incredibly focused and we were the nicest people to deal with. we didn't just sell something and then run away and move on. We were with you along the way. And the fact that they got it down to a single sentence, this is what we're trying to do. We're trying to help small businesses grow. I thought was just a fantastic lesson.
And let's be honest about it. The market that she built that business in since the financial crisis, so for a long period, is tough. I mean, to say it's tough is an understatement. It's a terrible market. Businesses being taken private, lack of interest in UK small companies, etc. I mean, it's like trying to sell T-shirts in a monsoon or something. So she's become almost the only man standing, or the only woman standing, right, in that space.
Yeah, and I think sort of one of the things that sort of she said that I thought was really interesting, this applies to absolutely everybody, was write down what you're frightened of and tackle it first. For her, it was public speaking. I think there's a huge lesson for everybody there to say, either learn how to overcome what you're frightened at, or go and hire somebody else who can do it instead of you. It's very easy to miss that bit, I think.
And what's great to see is she's, applying all of that learning to the next stage in her career, I suppose, which is the global network for female entrepreneurs, which already is making huge waves in the marketplace, hugely successful. That's to a large extent down to her.
It's quite sad, really, isn't it, that in 2025 we've still got a situation where female founders don't have anything like the access to finance, all knowledge is that you need to run businesses. So, I mean, what she's doing is incredible, and it's clearly struck a chord, hasn't it?
Well, good they've got Sam Smith out there.
Well done.